What's up, everyone? This is the first Vulture. I'm coming at you with another video. This time I'm going to be taking a look at Bitcoin on the weekly. And the reason I chose to do the zoomed out time frame is mostly because I've been looking at a couple other LA-ticians' work, and I've noticed that they've been struggling with the larger count. A lot of what they have just doesn't make sense. And so I just wanted to show you guys my perspective. And I'm not going to go too in-depth, but just to keep it short, so we look back at 2014. This is obviously our first wave, which I'm just going to throw on there. That text box is so annoying. And then here's our second wave. That much was obvious. We can call this slippage down here because there was no real volume. This could have been a single person that dropped it. So this is probably our second wave. And if we took an extension off this in logarithmic Fibonacci extension, we would see that we had like a 16.618 level here, which caused the initial sell-off. I don't know why that was picked. It was probably a large institution that just decided to sell at that point, and that kicked off our whole bearish sell-off. But really, so after this huge run-up we had in 2017, we know almost for a fact that that's the third wave. And because of the size of this sell-off, we know we're working on a fourth wave, and I actually think the fourth wave is in. And I'm going to show you guys how I justify that with Elliott waves. So when we zoom in, I've already labeled these waves so we don't have to worry about colors and whatnot, changing that during the video. But so to start off, from the top, we had this initial pop with some volume, and then we had a return to normal attempt, which failed. And so this is what caused all the smart money to get out, all the institutions to get out, and then the algorithms joined the bear side, right at this pivot here. And so this is our initial sell-off. It's not a 1-2. If we look at these waves, there's a bunch of crosses, and the one crosses 4. It's just an entire mess. So we know that this has to be an ABC. And so a lot of LA-ticians caught on to that, and they said, well, look, ABC, we're done. We're going to continue up. Because they didn't consider the WXY scenario, which is a WXY is basically two connected ABCs. So the X wave in a WXY divides into 3 more waves, an A, a B, and a C. There's actually a small ABC that makes up the X wave here, A, B, C. And then to make up the Y wave, it's just another ABC. 3 waves. So we have that here. I've labeled that one ABC, and then we came into our Y bottom. Now, a lot of Elliott-ticians who knew what they were doing said, this has to be the bottom. Look, we're flattening out. When we see this flattening out, a lot of the times, this leads to a bullish run-up, and I was considering that as well. But really, what showed me that we were going to have a continuation of the bearish trend was this huge wick we got here. This was, I think, the tether scare. But just in technicals, this was a huge bear hammer. And luckily, I was able to catch on to this, and I was able to warn my group, and we weren't part of the, what is this, like a 60% loss. That definitely hurt some people. And so you might be asking, well, you have your WXY, but what is this XZ garbage? I mean, are we just going to keep slapping on ABCs? Can this go on forever? Well, no, it can't. This is the most complex possible that a Elliott wave correction can be, which it makes sense. New market, it's very choppy, lots of people coming in and out, and people don't really know how to value these things with any sort of fundamental measures. So, that's what made up our fourth wave, is we had a ABC into a WXYXZ. And so to make up the Z wave, it was even trickier because we had our A wave to make up the Z wave. Well, I should back up. We had 3 waves to make up our X, so that was easy. So we knew we should have had a continuation downwards, which we did. And we had our A wave, okay, but then our B wave, which we know has to be, well, it doesn't have to be, but usually it's 3 waves. Our B wave had an A, a B, and then a C. But on a lot of exchanges, this C was actually lower than the A. And this is because the C truncated. And that threw off even more people. So we had our B, and then our C. This is really what got a ton of people, is because a lot of people think you need a large pivot to get a large move. Well, that's actually not correct. This pivot right here, this AB, gave us this massive sell-off into the C. But really, when we look at it, it's just the 1618. And that's also how we know that we have the correct pivot, because where did it stop? Well, it stopped off of this pivot. And a lot of people got caught off there because they were using the largest pivot. They were just using Fibonacci extensions trying to track the algorithms or whatever. And when you always resort to the largest pivot, that might not be correct, because in the whole reason this worked, the 1618 here, is because this was part of the Z wave. The reason it stopped here and not way down here is because we were working off of this pivot, not the largest pivot. And so off the bottom here, which I think is the bottom, we have some nice volume and then a controlled sell-off. So at a minimum, I expect us to get another C wave up. So, I'm definitely telling my group to be careful about shorting anything, because, just look at this. This is a, what is that, 47% in Bitcoin. Imagine what that would be in altcoins. So in some insanely bearish world where we have a continuation, is that possible? Well, actually it is. If we have an ABC, WXYZ, WXYXZ, that would be the most possible complex that this fourth wave could get. So what I'm saying here is, for this blue ABC, we could actually have this whole WXYZXZ mess again and have a continuation down. But the probability of that happening is so low that I'm not even considering it into my trades. But for now, I'm bullish on Bitcoin, and that's all from me. First Vulture, out.